So Q2 earnings are about to fire up, and there's a lot of crazy economic data that comes out in the market this week. So every Sunday, I'm going to drop a video just like this, breaking down the earnings that are coming out for companies and the economic news that really matters. Because there's not really many people that go on YouTube and break this down in a very simple way. So let me get myself out of the way here, and we will go through it. So heading over to Monday, we just have earnings from Fastenal, which really isn't that big of a needle mover company. And, the reason why earnings matter so much overall is because we have so many companies this week. And let me just flip to next week real quick. Like it just gets out of control what's going on. But that'll be in the next week's video. But earnings are critical to understand because you have different companies in different sectors and different whatever business that they're in telling us how the economy is, how the consumer is, where people are spending money, where they're spending money as a business to grow, and just overall how the economy is doing. So the more earnings reports that we break down, the more that we read through, the more informed as investors that we're going to be. So Fastenal is a company that it's kind of like a Home Depot on steroids, but they really only focus on industrial applications and like industrial tools and stuff like that. So it's not super important, but I'm not really going to elaborate more on that. So Monday's kind of a quiet day from the earnings standpoint. But if we go over to the economic calendar for Monday also, there's really nothing going on for Monday, July 14th also. So Monday's not really a big day. But Tuesday, July 15th is where things are actually going to heat up. So we're going to get earnings from Chase Bank, from BlackRock, from Citi, from Wells Fargo, and from Bank of New York Mellon. So we're going to start to get earnings from banks, which of course banks usually always report first. And the key things that I'm looking for in banks is this. I want to know, of course, how the revenue growth is for these banks, how the earnings per share growth is, all this stuff like that. But I want to see what these banks are saying with regards to how the state of the economy is and how the consumer is. Is there more credit card debt? Is there less credit card debt? How much cash do these people have in their bank accounts? How much cash did they blow? Stuff like that gives us clues on how the actual economy is doing. So heading over to the revenue for Chase Bank, we'll just break this one down super quick. You can see the revenue is growing pretty steadily quarter over quarter over quarter. But the key thing that matters to move the price of a stock in the long run, as I've told you guys a bazillion times, it's what the earnings per share of these companies do. So you could see that Q1 of 2022, Chase Bank reported $2.63 of earnings, and now we're all the way up at $5.07. So earnings have pretty much doubled in this time period right here. And that's going to correlate to what the stock did also. So the stock was a little bit delayed when it did its move, but very similar to that time period when Q1 of 2022 earnings ended. That's when the bottom was near, earnings went up, so then the stock price went up. It's very simple how this stuff works. Of course, the name of the game is trying to figure out which companies are going to report good earnings. And I'll talk about that towards the end of the video of how to get clues from other companies to get a gauge of maybe how one company is going to report based on how something else reported. I'll bring it all together here in a second. But, we got BlackRock, Citi, Wells Fargo, and Bank of New York Mellon. So Tuesday, we have some bank earnings coming up. And Tuesday, if we head over to the economic calendar, there is a lot of stuff going on here. So let's break down what the key things are. So number one for me is going to be the consumer price index. That's the main headline number for inflation. And you guys know, again, by following this channel, that inflation dictates what interest rates are going to be at. So if interest rates go down, that's usually because inflation's going down. So inflation kind of just steers the path for interest rates. So if we look at this, the median forecast, meaning the middle number forecast for inflation, is expected to be 0.3% month over month. So from last month to this month, it's supposed to be 0.3%, and the previous number was 0.1. And if we just want to annualize this, we would just do 0.3% times 12, which would be 3.6%. And the Fed's target is 2%. So we'll see how this plays out, if this is actually sustainably going to be at 0.3%, and maybe it's going to trend higher, maybe it's going to trend lower, whatever it may be. But Jerome Powell, the Federal Reserve Chairman, he just talked about at his last Fed meeting that he expects June and July to be a little bit elevated for CPI numbers because this tariff and inflationary aspect of tariffs is now going to be, circulating through the economy. And there's a chance that that's going to raise the price level, which would then indicate we have inflation. But he's expecting that to be transitory, meaning it's not really going to stick around for too long. So June and July, maybe it goes up a little bit, but then after that, we trend back down, which of course is good. And that also corresponds right here where it says CPI year over year is expected to be 2.7%. The previous month was 2.4%. So again, June and July are expected to be a little bit elevated and then trend back down. So that's why this is going from 2.4 to 2.7. So core CPI is kind of just like a zoomed in look on just regular CPI data because core CPI is going to exclude certain volatile items that move up and down a lot. And core, the Fed says, gives us a better look at what true inflation is actually doing because, again, it takes out the things that are very, very volatile. But I don't really like core as much as what Jerome Powell does because this is the headline number. This is everything factored in. And that for me is the main number that I like to focus on. And then the rest of the stuff for Tuesday, there's not really that much. There's just a few Fed governors that are going to speak. We'll see what they have to say. And these governors matter because they're going to influence what Jerome Powell actually does with interest rate decisions. And again, interest rates are gravity on the stock market. So we're going to be seeing what those Fed members actually say and get a little bit of a clue of maybe we're going to cut sooner, maybe we're going to cut later. We'll see what happens. So that wraps up Monday. That wraps up Tuesday. Let's go back to our calendar here and see what we got left. So ASML is really a big one. And a lot of people care so much about how they report because it might indicate how the chip sector is going to do. So remember in the beginning of this video, I said that some companies will give us guidance and clues on how other companies are going to do. So ASML essentially helps TSM build the chips. So ASML, think of them as they build the screwdriver and then TSM uses that screwdriver to build the chips. Very simplified example there, but that's pretty much how it works. They supply the machines to TSM to help design these chips and manufacture them. So if ASML's numbers come in bad, which we're expecting $5.94 per share, that could indicate that the chip and AI sector is slowing down a little bit because maybe TSM is not buying as much stuff from ASML because TSM doesn't have as many orders from AMD and Nvidia, for example. So if you have any exposure to the AI sector, I think that ASML is going to give us a really good clue on how that's going to do. Of course, I want to see good revenue growth, good earnings per share growth, but I want to see how they guide and what they say for demand going forward. Now, I'm not going to do this little detailed breakdown for every single company here, so don't worry about it because we're going to break down some critical things at the end of what I'm looking for. So you can see right here, Q2 2025, $5.94 is expected, which I already said that. But let's go back here and see how they reported the same quarter last year. For Q2 of 2024, they did $4.32. So $4.32 versus $5.94, that's pretty good earnings per share growth. And that's also at a time that their price earnings ratio level is around 33, which of course we have to go add this up and divide by the share price because sometimes these numbers aren't accurate here. So whatever broker you're using, or whatever platform you're looking at, don't always trust these numbers that they say because if we just add this, this, and this, which is a trailing 12 months earnings, we add all four of those together and then we divide by the share price, I bet you it's not going to come out to this number right here. I'm not going to do it for you, but if you guys just want to pause the video, go this one, this one, this one, and this one, add it together, and then divide by this number right here, the 801, you're going to see that it's probably not going to be 33. I'm not even going to do it for you because I'm sure that it's not going to be 33, but definitely go check that out for yourself. So we'll see. So good earnings per share growth is projected. Good revenue growth is happening right here. And of course, the share price has been pretty bumpy, but overall the trend is up. So we'll see what happens with ASML. Johnson & Johnson, not really a big needle mover. Goldman Sachs, kind of a needle mover. Bank of America kind of falls into this category here. We'll see what they're going to do. Morgan Stanley, Progressive Insurance, these aren't really big needle movers. And United Airlines, honestly, like this is an important one for me to listen to because what does United Airlines give us? They give us a look into the state of the economy because a huge percentage of travel that actually happens is discretionary travel. So just think about it. If you don't have money, maybe you lost your job, maybe you think the economy is going down the tubes, you're not going to want to go spend money to go travel on a vacation because that's discretionary. You don't have to do that. So if United Airlines is getting strong bookings, they have a lot of flights booked out, the flights are full, they're charging more for seats, more people want to fly first class, whatever it may be. And of course, if the price of gas goes down, it helps their margins. But, if they're booking out and there's a lot of demand for flying, that gives a good gauge of how the economy is actually going to be doing. So United Airlines will be a critical company to get a gauge of how the economy is actually doing. Discover's another good one. This is kind of like a credit card company and they do loans and stuff like that too. That kind of falls into the banking category. We'll see what they're doing with that. So overall for Wednesday, there's not a bunch of things going on with earnings, but there is some stuff on the economic calendar that will be important too. And the main thing that I'm looking at here is the producer price index, which is essentially another inflation metric that basically just says how much it costs to produce goods. And we are expecting 0.2%, which was 0.1 last month, and we'll just see how that grows and if it grows or if it goes down, whatever it may be. But this kind of leads into what actual CPI is going to do because CPI doesn't get realized until we actually buy the good. So like if this pen right here costs more money to make, that's going to show up in the PPI. But if I buy it for a higher price because the company passes that extra cost on to me, then it's going to get realized in CPI. So we want to see PPI come in low because that could indicate that next month's CPI could actually be low too. So we'll see what PPI does. Overall, there's not a lot of other things that I really want to talk about for Wednesday. Yes, we could look at industrial production. We could look at this number right here too and see what it does. But these aren't really like big needle movers. More so what more Fed governors are going to say, the beige book, which is just more details on what the Fed is actually thinking right now. Overall, not too much stuff for Wednesday for the economic standpoint. So let's go to Thursday. So we have Pepsi, GE, Abbott, Cintas. We have some other companies here. Honestly, these companies are important, but they're really not that big of needle movers. So the big dogs that are actually going to be moving the needle for Thursday is going to be Netflix, Interactive Brokers, and there is one other company that's not actually being shown right here, and that's going to be TSM. And the reason why TSM, Taiwan Semiconductor, is going to be so big is because they build over 90% of all the AI data center chips. So basically, companies like AMD and companies like NVIDIA, they design the chips. But once they design the chip, they send a blueprint to TSM and say, hey, TSM, can you go build this for us? So TSM's guidance is going to be critical. TSM's earnings are obviously going to be critical. The revenue is obviously going to be critical. So TSM is definitely going to be one to watch. And I do own shares of TSM myself, and I'm very bullish on the company. And fundamentally, I think it's relatively cheap for the amount of growth that they're doing. Earnings per share is growing like crazy, revenue is growing like crazy. And you could just take a mental picture of this chart right here of revenue and earnings per share, and then just go look and see what the chart actually did. Chart went up, went down, went up, and earnings per share up, down, up. So this just builds on the fact that earnings matter for what the stock price is actually going to do. So let's roll into Netflix and Interactive Brokers real quick. And the reason why I care about Netflix so much, and man, just look at this chart. It did a huge move from 179 bucks per share, now over $1,200 per share. And this was June 20th of 2022, which is nuts, this big move that it made here. But just quick glance, like look at the price earnings ratio level. And again, I'm not saying I trust this number, but almost 60, it's pretty high right there. And if we go to earnings right here, you can see it's very, very choppy, but the earnings growth overall is going up. The revenue growth is going up. The stock price is going up. But just because revenue and earnings are going up, it doesn't mean that the stock is a buy. And I think that the main reason why Netflix made this big run right here is because they're working on doing ads on their platform, which they didn't really unlock that feature yet. And as they start to roll out more ads, they're going to bring in more money. So they kind of had this thing like in their back pocket of, well, once our earnings growth and once our revenue growth starts to slow down a little bit, we're going to introduce ads to our platform because, Hulu and Peacock and all the other main streaming services do it. They're like, we're making good margins without doing that. So once we add that in, it's going to be great for the bottom line. It's going to make us a lot of money. So that's why the share price is going up a lot on Netflix, in my opinion. Interactive Brokers is just another one that's going to show us how money's flowing in and out of brokers. Usually, when the stock market's ripping higher, they do good. When the market's going down, they do less good. And, people that own Robinhood stock, this will give you a little bit of a clue into Robinhood as to maybe what Robinhood's going to do. A little bit of clue with Interactive Brokers right there. Now, if we go down to Thursday on the economic calendar, the key things that I'm going to be worried about here is initial jobless claims, which continued jobless claims come with this too. And this is basically just saying this. If you have a job and let's say that you get laid off, if you get laid off right now, you're going to go file for unemployment benefits. The first time that you file, that's going to be an initial claim. But if you stay on it for more than 1 week, you're going to go into the bucket of continued jobless claims. So initial is going to show us how many people got laid off, and continue is going to show us how many people are looking for work but can't find work necessarily. I know that the data is kind of rigged and you could skew it however you want to skew it, but that's what this data is going to show us right there. Now, the other stuff on here, we could look at retail sales, which does matter, import price index, which is kind of like an inflation metric. We could look at home builder confidence, which it's not really a huge thing, and then just more Fed governors. So important day on Thursday, but not a huge day on Thursday. The key thing is going to be Netflix and Interactive Brokers for me on Thursday. Now, for Friday, we have American Express, Charles Schwab. And you guys know Charles Schwab is my favorite broker, and I'm not sponsored by them or anything. I just think the broker is one of the best ones out there. 3M, Ally Bank, and I don't even know what this company is right here, but honestly, it doesn't really matter. It looks like it's a world's premier oil field service company measured by market share. Whatever it may be, this company is not a needle mover. That's what I'm getting at. So American Express kind of falls into the discover category of, are people spending money? How much debt are they in? What's going on with the economy? Blah, blah, blah. You get it. These give us clues into each other. Charles Schwab is related to Interactive Brokers. And again, if Interactive Brokers guide super strong and they have great numbers, you'll probably see Charles Schwab kind of like price that in immediately. The stock price will probably go up a little bit. And of course, you'll probably see Robinhood go up a little bit too. 3M, we all know what 3M does. They do a bunch of just different things out there. It's kind of like a consumer staple company where, they are supposed to be recession proof because you're going to need these products no matter what. But 3M is not really a big needle mover, in my opinion. Ally is not really a big needle mover, in my opinion. And if we go over to Friday for the economic calendar, there's not really much going on here. Yes, we could look at consumer sentiment. And the main reason why I care about consumer sentiment is because I kind of know what this is, and we all know like if the market's going down, consumer sentiment's going to go down. If it's going up, this is going to be a higher number. I like to buy when people are freaking out and when this number's low, and when this number goes up, I don't like to be as bullish. I like to sit on the sidelines and wait, strike when things make sense. So overall, I hope this video helped you guys out. I'm going to do this every Sunday. I'm going to drop this video right away. I'm recording this right now on Sunday, and I'll drop it. Hopefully it helps you guys out. This will plan out the whole week for you. And if you want to get all my detailed analysis, all my trades, my whole course, all that stuff, click link below, do it for free. It's going to change your life. If you don't want to do that, watch this video right here. It's going to blow your mind on how to invest in the stock market right now. I'll see you guys there.